Hello, I'm Kevin Walton. I'm with C2 Financial. So is there a loan for seniors or people over the age of 55 that's a stated income loan? Yes, there is. And we're going to jump into that right now. So this loan, that's a stated income loan for people over the age of 55, it's available as both a first mortgage and a second mortgage. So you can get a second mortgage that's a stated income loan as well. And it comes with optional monthly mortgage payments. That's really the kicker on this loan. So now it's not free. The interest that you choose not to pay on a monthly basis gets tacked onto the balance of the loan, gets paid later, either when you sell the home, you refinance the loan, or when you pass away. You can literally not make another payment on this loan for the rest of your life if you don't want to. And again, it's available on a first mortgage or second mortgage. So in the first mortgage version, we would have to pay off the existing first mortgage that is there, right? And if there's any lendable equity left, then you would get that in the form of cash out, cash in hand. Sometimes there's not room to give any cash in hand. There's just room just to wipe out the first mortgage that is there. Now, if you want to leave the first mortgage in place that you have, let's say you got a really good rate of 3%, something like that, and you don't want to touch it, but you need money for something, to build an ADU, pay off debt, for whatever you might need it for. We do a second mortgage version of that loan, state income loan, again, if you have a 720 score or better. You could still get the loan if you have less than a 720 score, but we have to get some income documentation to show you can pay your first mortgage payment on your own if you're doing it as a second mortgage, the new loan. So it's a little bit more difficult, I guess, if you have less than a 720 score, but still possible. So people who take one of these types of loans, they don't always not make monthly payments. They make partial payments, maybe every 3 months, periodic payments, large payments when maybe an investment comes due. They want to pay a chunk of it down. You can do that. So it isn't just no payments at all. You can make partial periodic payments whenever you want, as often as you want, in any amount you want. So on this stated income loan, how much of a loan can you get? Well, they don't give you that much. Typically, it's 35 to 45% of the home value can have loans outstanding on it. So if you get a second mortgage version of this loan, no more than 35 to 45% of that home can be encumbered with a loan. So if you have $1 million home, and in Southern California where I am, $1 million is not a huge home, but $1 million home, let's say you owe $200,000 on it already, and you don't want to touch that first mortgage rate. You got a good rate on it, but you need a chunk of money with some flexible payment terms. They'll give you possibly a loan of $200,000. That's it, maybe $250,000. The two added together, the $200,000 you owe already, plus the $250,000 that you're getting, is $450,000. That's 45% of $1 million home. Now, on conventional loans, you can get much larger loans. Up to 80% of the property value could be encumbered with loans. Now, that's $800,000. Well, why would someone want one of these loans? Well, they lend you so much less. The reason why is because you have a stated income loan, availability on it, not showing any income to get the loan, and the optional payments. Conventional loans don't have either one of those two things. So how do we generate the loan amount itself? It's 3 factors. Age of the youngest borrower going on the loan. Again, 55 is the minimum age. Equity position property. An appraisal in the house will tell you how much you have in lendable equity on the property. And prevailing interest rates. Those 3 factors, and out comes the loan amount. So it could be different for each person or each couple because all those 3 factors can be varied. So I've described this loan as a state income loan for people over the age of 55, and it is a reverse mortgage. People say, wait a minute, you got to be 62 to get a reverse. That's on the HECM reverse mortgage, the one we see on TV all the time. This is a non-HECM loan. It's not in the family of FHA loans like the HECM is. It's a different type of loan, different guidelines, more flexible underwriting, but it is a reverse mortgage. And the reverse mortgage of today is different than loans were 10, 15 years ago. I'm not sure if I would have even done one of these loans 10, 15 years ago, but they've changed the rules to make it more user-friendly, more protections, and now I'm on board with it and understand it and know how to explain it to people. But still, people today remember the way the loan used to be. It was not a very good loan. So, and older loans that are still on the books, we might still hear of some of those problematic loans. We couldn't refinance them to the new loan because there's not enough equity to do it. But new loans going forward, much different. So just kind of keep that in mind and know that. So again, my name's Kevin Walton. I'm with C2 Reverse. I lend only in California. Now, the state income loan is available in about 20 states, I believe. Not every state has it. So if you have any questions on it, feel free to go to my website there, which is californiareversemortgage.biz. You can click on the button that says, tell me your scenario. I just need to know the borrower's ages, approximate value of the home, and then I could do some numbers for you, and I make videos for you just like this one. I do amortization tables. I explain exactly how the loan works. So again, feel free to reach out, and I can give you more information if you'd like. Thanks, and we'll catch you in the next one. Bye.